Hey, everybody, welcome to our episode today of Let's Get Jeffed Up. I am super excited today to have with us somebody who's a friend, a boss, a mentor. We have Anthony Casa, the CEO of UMortgage. And I just want to preface this with the fact that I was ready with someone else that called me last night and said, "Hey, I am super sick. There's no way I'm going to be able to be on the pod tomorrow." And Anthony and I were actually texting. And I said, "Hey, man, I know you're super busy, but would you be willing to do this with me?" And as busy as he is, he jumped right in. So I just wanted to say I appreciate you coming on, Anthony, today and helping me get some knowledge out to the community. So let's talk a little bit. I think it's perfect time for you to be on here. So we're going out of 2025 into 2026. Kind of give us your high level thoughts on real estate, mortgage, and where the market is going from last year to next year.
It's very market specific. Like I was just in South Jersey, and it's an extremely it's a very much a seller's market still there. But 40 minutes away here in Philadelphia, it's a buyer's market. So I would say that is market specific. Not all markets are created equal. But I think what is clear is that we are definitely heading towards a lower interest rate environment, which is solving the major problem that's out there in the market today, which is affordability. I think everything's more expensive, whether it's milk in the grocery store, gas, at the pump. Interest rates have been higher these last couple of years. Property taxes are going up, homeowners insurance is going up. It just costs more to do everything now. So I definitely think that a little bit of relief with interest rates will be favorable to buyers. I don't think it's going to be at a level that comes at a significant cost on home purchase prices. But that's where I see things going.
Yeah, I completely agree with you. I think, you hear a lot of these doomsdayers out there talking about market crashes, and things just are completely different than where they were in the 2008, 2009 marketplace. When you look at our inventory, we saw that today. We had new home inventory came out today. We're way below where we were in the time of that crash. We only have about 4.2 months of inventory nationally, which puts us really in a much more balanced marketplace. Here in my market in Boise, we're in a pretty good buyer's market. You can get a lot of concessions. We do have a lot of builders here that are offering great concessions. So my opinion is, it's kind of that old parable. When's the best time to have planted a tree? 20 years ago. When's the next best time to plant a tree? Today. It's similar, in my opinion, with buying a home. 70% of the wealth in this country comes from people who have started their world in real estate. So talk a little bit about too. We at UMortgage, we're really on a trajectory that has been, for lack of a better word, like a rocket ship. We have gone from being not a company 5-6 years ago to $2.4 billion in mortgages. I believe is where we're at right now. And you can correct my numbers because you're way more on top of that than I am. But talk a little bit about why our hybrid model seems to really resonate with the consumer, and how you came up with that model, and kind of where we're going as a company.
Yeah, I think there's a couple things that matter. I think first it's uber localized. We're in a world today with the Amazons and all the big technology companies. You're seeing with e-commerce a lot of the little guys locally are getting squeezed out of the market in retail and whatnot. In the mortgage industry, in the real estate industry, it's a local business. It is super local. It's community based, and I think that's not going to change. I truly believe that in a very major way. So I think everything we do is to amplify the local loan originator through their partnership with local real estate agents. And when we say amplify, what do we mean? We mean first, educate. Education is so important. We're not just in the transaction business of facilitating loans. We're in the business of educating aspiring home buyers. And I think that's a big thing, is like the American dream is not dead, regardless of what doomsday folks say. People want to buy homes. People want to be homeowners. People need to understand the process, though. Our education system is broken. There's not a lot of education on financial literacy. There's not a lot of education on becoming a homeowner. That's where people like, Jeff, like yourself, like all of our local loan originators across the country come into play. Is they're focusing on educating real estate agents. They're really bringing a robust level of product to the market to make sure that everybody is being served, because not everything it's not all one size fits all. Your self-employed borrower is outside the box. Your investor that might need a DSCR loan is going to need that specific loan product. So we bring a very wide net of products to the local market. And we focus on providing the marketing and resources for our loan originators to go out and educate their networks and educate their communities. And I think the growth that we're seeing has a lot to do with the growth of our loan originators. I was going through the data this morning. So many of our people have grown 50, 100, 200% in the last 2 years. So it's not just, UMortgage growing, it's our loan originators are growing, which means they're impacting more home buyers.
Absolutely. And part of, I think, why UMortgage from a loan originator standpoint is the amount of support that we get given from our ops team, from our leadership team. I don't know anybody else on this call that could have been just in a casual text with their CEO and said, "Hey, I've got a podcast tomorrow. Can you help me?" And they would not have. I mean, I could tell you literally wanted to do that so much to kind of move some things around and make it happen. And that's the kind of leadership that we have in place. And that's from the top down. That's just not who you are, Anthony. That's who our entire leadership team is. We don't lead from the top down. We kind of lead from the bottom up.
Yeah.
And I believe that is a huge thing. And I know I sound like a little bit of a commercial for UMortgage, but I'm passionate. And I believe that this company is where the future needs to go. If you want to be an originator and feel like you are truly part of a team and not just originator number 1, 2, 3, 7, 8, UMortgage is a great place to be. So we have some comments in our section. Aaron Fearson, who's a great guy out of Salt Lake. I don't know if you've met Aaron. He's with Real Brokers down there. He asked, he'd love to hear some thoughts from you around what you think rates are going to look like in the near future.
I'm a big believer, and I'm sure there will be, listen, everybody's got an opinion. All I can tell you is that I believe that interest rates are going down. I think at the end of the day, the most powerful person in this country is the president of the United States. The president has made it very clear that he wants rates to go down like that. That's in his passion. So, there's going to be a change at the Fed. He does control who the new Fed chairman is going to be. I'm 100% positive it's going to be somebody that's coming in with a dovish view of where things need to go. And I think rates are going to go down. I really, really do. And I think, with the spending cuts that are happening, with the inflation data that's been coming out, with the jobs data that's been coming out, it all points to an environment that's conducive to lower interest rates. Now, they're not going to be 2020, 2021 rates, but I definitely expect us to get an idea of what 2019 rates were like. I think that's a realistic viewpoint. And I think that's going to be very favorable to everybody that bought a home in the last 3 years. Because if you bought a home in 2022, 2023, 2024, or even 2025, your rate is up there. So if those people are able to save another, $300 to $1,000 a month because rates come down, that'll be incredibly valuable to them. And then that'll bring in a lot of people that have been on the fence because there's affordability issues. So rates, I expect rates to come down. Thank you, Aaron. I appreciate the question.
I agree with you. I'm a big believer in Barry Habib, and I know he's a great friend of yours and a friend of mine as well. And I think, you don't become the 5-time Crystal Ball Award winner by not understanding your stuff. So I look at what Barry's talking about, especially with the jobs market. And also when you talk about mortgage spreads, and it's a little higher level, but mortgage spreads got out of control coming out of the pandemic. And we're seeing now the mortgage spreads coming back into line. We're still not back where we need to be. But what that means is we're decoupling a little bit from that 10-year treasury number. So it's not so lockstep that if the 10-year goes up, mortgage rates go up, or if the 10-year goes down. We're starting to see a little bit of independence. And that's a good thing for mortgage-backed securities. And again, I know that's a little more high level, but one of the other things I think that's going to happen in our marketplace is inflation is getting under control, but the big thing that nobody's talking about is wage growth. Wage growth is what really is the catalyst for affordability. And with wage growth, if you can get your wage growth to outpace your inflation, what that means is you can afford to pay more for things. So that really helps affordability more. And that's the other piece that we're seeing. And Powell talked about that after the last Fed meeting, that the biggest thing they saw was wage growth is starting to now outpace where inflation is. I don't know if you have any thoughts on that. I'm just kind of riffing because we didn't get a chance to really prep up. But to me, wage growth is really going to be what makes affordability happen.
I think wage growth is a huge factor. I still think that's only, you know, the wage growth is disproportionately impacting the higher end of the market. You know,
I agree with
like it's the ultimate 80-20 rule. So you have 20% of the people that are benefiting from 80% of the growth. And that's great. But I think where the reason why rates are so important is, generally speaking, the people that can't get in the market right now are not the people that are necessarily feeling the benefits of wage growth. They're, you know, they're your union workers. They're your, you know, your blue collar people that with interest rates where they're at right now, they're just $200 to $300 a month away from, you know, being able to afford a home. But I think it's a huge impact. And in areas like Utah and Idaho with high home values, huge deal. Absolutely.
Well, I think the other piece too, and you hit on something, we here in Idaho, maybe in Utah and some of the Western states, we don't have as much of that union driven blue collar. So that's not necessarily part of my lexicon when I'm thinking about that. We have so much tech here that our wage growth is being driven tremendously by tech and by those who are working in tech. You know, Micron Technology is in Boise and they're spending $15 billion over the next 5 years to improve their facility. I just did a video on Facebook that they're adding, in the next year alone, they're adding 2,000 jobs at Micron and creating 17,000 construction jobs to build those fabs in those spaces. So it's a great point that we also have to look at it as my localized reality and your localized reality aren't always the same thing. So when you see people talking about this stuff on Facebook, if they're talking from their localized aspect, you might not understand exactly where they're coming from. So that was great perspective.
Yeah, and one of the things I'll just comment is, like, you know, again, there's you have to look at the tea leaves of what's going on legislatively and at the federal level as well. When you see that, you know, all of these deals are being made with different countries to make big investments in the United States, it's hard to put that in perspective of how that's going to impact our economy. So, you know, you saw, you know, Donald Trump go to the Middle East, and you know, trillions of dollars in deals were made with big investment commitments in the United States. You know, that's a lot of infrastructure investment, data centers, fulfillment centers, you know, operation centers for, you know, manufacturing. Those are things that take 2, 3, 4 years to, you know, really play out. And I think for us, it's understanding those are deals that were made in 2025, but that will, you know, start to be built out in 2026, 2027. And that's going to drive not only wage growth, but that's also going to drive, you know, investment in the local communities. You know, when there's more jobs at a factory, you know, you need more Starbucks, you need more McDonald's, and you need more Walmarts and gas stations, all that stuff. A rising tide lifts all boats is what I'm trying to say, is those will be things that unilaterally positively impact wages across communities in this country.
100%. You know, I've been doing this for 25 years, 26 almost. You know, you've barely been alive that long, but we always see that commercial leads residential. When you see commercial growth, residential has to follow. It's cyclically correct to do it that way. By the way, Bill Stevens jumped on and said, "Merry Christmas, Anthony." And I know you know Bill. Bill's a great guy.
Merry Christmas, Bill.
Let's talk a little bit. I'm kind of going to throw you a curveball, and you can tell me it's none of my damn business. But let's talk a little bit about Anthony Casa, because you know what? A lot of people probably don't know you and your story, but it's inspirational to me. So can you talk a little bit about kind of how your life started, where you came from, and how it gave you this incredible drive to be the human being you are today in the mortgage world?
You know, I'll just kind of start with my how I got into the mortgage business. So I dropped out of school when I was 13. I was in the restaurant business, and my dad had a stroke. And at that point, I was the only one that really could, work, make money, and help contribute to our family who didn't have a lot of means. So that's what I thought I was going to do for the rest of my life. I thought I was going to run restaurants, become a restaurant entrepreneur. I was in love with the business. And fortunately, because while that was great then, fortunately, one of our customers was the vice president of a mortgage company locally. His name was Mike Shad, former first round pick and offensive lineman for the Philadelphia Eagles. And he would always, say, if you got in the mortgage business, you'd make a ton of money. And I was like 17 years old. He thought I was, in my 20s because I was running a restaurant. And he thought, just how could this person be so young? So after hearing that for a year, I made the leap. I went and applied for a job as a loan officer in the mortgage business, and this is in 2003. And the one thing that, like, luckily for me, starting working 13 years old, is like I just always had a really relentless work ethic. Like that was just who I am. And I got in the mortgage business, and I sat next to Mike, and I listened to everything he said. So from like 8 a.m. to 5 p.m., I'd listen to what all the sales guys had to say, making their calls. And then from 6 p.m. to basically midnight, because I'd be calling all California people and people on the West Coast, I would regurgitate what I heard from them to customers, borrowers. They give me, I had stacks of leads. This is back in the day before, all the tools and resources we have today. So I learned the mortgage business by hearing from others, learning from others, became a top salesperson, and I fell in love with the business. I fell in love with serving consumers. I fell in love with the journey for homeownership. And most importantly, I think I really fell in love with the fact that homeownership is really simple when you're in it, and really complex when you're not in it. And to me, being a platform or aspiring to be an agent of translating that was always something I aspired to do. And then I did that with my first company at Garden State Home Loans. I felt like I made a big impact at AIM, helping share that vision with mortgage brokers across the country. AIM was a trade association for independent mortgage brokers. And then here, this was really a big opportunity for us to build a national platform that was focused on educating the consumers at the same level. So I've been super entrepreneurial. I've led 4 or 5 companies, no high school education, no college education. I've learned strictly from working in businesses, learning from people. I have, I've had so many great mentors, and even to this day, I continue to learn from everybody that I meet with every single day. I'm big on just like I just had a meeting in South Jersey with 2 loan officers down there, and I had 2 takeaways. I came back and immediately start working on something that we could implement here. I'm learning every day. I'm a big proponent of speaking to people, learning from people, being open-minded, setting your ego aside. I've had a lot of humbling experiences in my life, and because of that, it's allowed me to approach my life and business with the level of humility that I still think I can get better every day. I still think the best version of me is, in the future.
Yeah, I love all that, dude. It's obvious when you actually take time to sit down. It's easy for people to go online and live through some persona that other people have put out there, but until you actually sit down and break bread with somebody and get to know who they really are and know their true heart, I don't think it's right to try and pass a judgment on somebody that way. Talk a little bit about there's a couple things I want to tackle in the next 10 minutes. Where do you think, not necessarily, I want to know for UMortgage on the selfish side, but in general, where do you think AI is going to be in the mortgage industry, and how's it going to impact generations or originations through ops? Where do you see where AI could make it a better experience for the consumer?
AI is going to impact everything. I don't think it's understated or overstated the impact that AI is going to have. I think we're really scratching the surface with it. I think right now, in the mortgage industry, how's it going to impact things? I think it's going to streamline a lot of stuff. Like, this is an extremely manual industry. There's so much data inputs. There's so much manual reviewing of numbers and documentation. I think just like what's happening in the medical industry right now with AI, I think mortgage is not too far away. Like, we're just gonna make things easier. And AI, what it can do for the industry is it can streamline processes, eliminate mundane, over touching of documentation, reviewing of documentation. and ultimately lower the costs. Just like the cost of manufacturing, I think NBA puts a report out every single year. Cost of manufacturing alone is like $13,000 a year. Now half of that is in sales. The other half of that is in fulfillment. But I expect that to come down substantially, and I expect it to be cheaper for consumers to get loans and cheaper for companies to fulfill loans. So I think that's one element of it. I think the other element of it is just, from a salesperson's perspective, or for even a realtor's perspective, the ability to do more effectively. The ability to manage all the things. One of the hardest jobs in out there is being a loan officer, being a real estate agent. Like, it's 100% commission. You're wearing 10 hats. There's a lot that you have to do and a lot you have to be good at to be effective. I think AI is going to really help those individuals be way more efficient, way more effective. So that's from the scope of the mortgage industry. But I mean, from a holistic standpoint, I just think, when we think about where things are going to be in 5 to 10 years, I think, we're going to have a very different economy in the future with what AI is going to bring to the table.
I agree with all that. I think it's interesting because AI for the 800 credit score borrower putting 30% down, an AI bot could probably make that loan happen fairly efficiently. It's when you get into the complexities of mortgage. One of the things I love to say about people, mortgages are a lot like snowflakes. They all look the same when they're falling to the ground, but when you put them under a microscope, every single one of them is different. Yes. So it's the complexities of mortgage that I think that AI will have a difficult time understanding, wrapping its collective AI brain around to solve those problems. That can only come with experience, in my opinion. That's why we do such a good job with helping those loan officers that maybe aren't as experienced have access to people in our ecosystem that are experienced, so we can have that group think. Another great thing is not one of us is better than the collective. So together, we all make a much better loan officer at UMortgage than the one guy. We've got a lot of really good one-offs, but they don't know everything. And so when you can put that in a group thought ecosystem like what we have, it just makes us that much better.
I completely agree.
Talk a little bit about what your vision is for UMortgage going forward. Kind of, if you are a loan officer out there and you're somewhere where you're thinking, I like where I'm at, but I'm interested to see what else is out there. What are the things that you would say if you had to say to somebody on the street, here's the number one reason why you should give UMortgage a shot? What's your answer to that question?
Yeah, I think, again, I would focus on, the people that are meant for us. So we're for me right now, like, I've never had a clear vision and understanding of who should be at UMortgage. It's not, we're not building for everybody. I think for the person out there that has a growth mindset, that wants more than they have, that are not currently reaching their goals, not currently growing at the pace that they want to be growing, feeling like they're in an environment that is not conducive to their success, feeling like maybe, they're not the highest person on the totem pole, so they're not getting the resources or the attention or the support. I think for that person, we're a platform that can help take you to whatever heights you want to go to. The amount of LOs, the amount of people that are at our company, I was having this conversation just yesterday with Jay Bunty. Chris Garceau is a prime example of somebody who did 15 million last year. He's going to do 45 million this year. That doesn't happen out there. Evan Cardenas, 2 years in a row, has doubled his business. He's only been in the business for a couple of years, and this year he's going to do, $21-22 million in business. So I think from a platform perspective, we are a non-ego platform. We're built for every single LO to be successful. The resources that LO number 200 gets is the same resources LO number 1 gets. The access to our top people, our top strategies, our best practices, whatever access to me, whatever those things are, is equally distributed. So I think, at the end of the day, my vision is to, have more and more of those growth mindset people here and be able to bring more and more success to those people and put us in a position where our growth isn't a headcount situation. It's a per loan officer growth story. It's not just about how many LOs we have here.
Yeah, 100%. I would also throw out there, and this is a big shout out to Sean Grapevine. Tempo is something that is being developed within our ops system. I don't even want to call it a CRM because it's so much more than that. It is literally it's an ability to track your business in a way that you just won't miss opportunities. It literally is, for lack of it, it's a holding pen for your opportunities that you can use to not miss out on opportunities that maybe weren't as fresh when you first got them, but are ready to be incubated. And so you throw those into that Tempo ecosystem and it becomes an incubator for you of deals that other loan officers are going to lose. Talk about that a little bit.
Yeah, I mean, that's really the core of the vision is, for us, everybody in our business, obviously we build Arrive. So Arrive's, our transaction engine, and that's the best transaction engine in the mortgage industry. For us, Tempo is all about us. It's a sales ecosystem. And really what we're trying to do there is put a loan officer in a position where they can they don't have to memorize everything. Like Jeff, you've been doing this for a long time. You got a lot of tribal knowledge, so a lot of habits that have been built where you're a machine, and that's why you provide a great experience and you have your sales processes dialed in. What we want to do with Tempo is when you put your leads into the system, when you have your relationships, the people that refer you leads into the system, it's allowing you to do less thinking and execute on more of the doing. So the sales journeys, hey, listen, a loan just got disclosed. What's my next step? Here's, go over the disclosures with your borrower. Here's a template email that you can send the borrower going over the disclosures. Here's a script of a video that you can record to send to your borrower. Like, we want to make it touchless for the loan officer to be able to stay on top of their business, to convert their leads. We also want to crowdsource through the system what is most effective. And I think when you have hundreds of loan originators applying different strategies and taking different approaches to how they run their business, there's a lot of silos on what actually works. You work with somebody like Adam West, who is a prime example of, top producer in the industry, one of the best that there is. If we're in a position where we can create a scripting and sales training within the system where loan officer number 200 can get access to Adam, West's playbook, and they can apply it within their day-to-day, that person's going to close what took Adam 6-7 years to do and learn into months or weeks. So it's all about really creating a platform that allows loan originators to best serve their clients, but get the best results as quickly as possible. I mean, you and I, when we got in this business, we were in the office. We were able to sit there and hear from top salespeople and learn that way. In this decentralized world that we live in today, that's not really as much of a thing. So I think for us, we're trying to create a system that allows the resources, the scripting, the training to all be at the fingertips of the LO so they can drive their business in the best way possible.
Yeah, and I live that. I can tell you, like you said, I've been doing this a long time, but I've never found a place where I can organize my thought process as much as what we have here at UMortgage. And it makes my job not only easier, but much more efficient. It's just the truth. So if somebody wanted to reach out and find something out about UMortgage, what's their best way to do that? Who's our point of contact? Is it you? Is it Jimmy? Is it where do we start?
I think the best way is if you're a consumer, you can go to umortgage.com. If you're a real estate agent that's looking for a loan officer to partner with, you can go to umortgage.com, and we have an entire directory of our local loan originators. So wherever you're at, you could find one of our local loan officers in your local market to work with you. If you're a loan officer, then you can go to umortgage.com, and we have a career page specifically for loan officers. You can feel free to reach out to me directly. My name's right in this stream, so you can reach out to me directly, send me a DM on social media at any time. But I can tell you that, no matter who you reach out to, we're going to make sure that we, again, we serve you to the best of our ability, regardless of what audience you are.
Awesome. Well, I know you got a hard stop, but I just wanted to say thank you so much for doing this with me today. I appreciate you much more than you know, and I look forward to the next time we get to see each other in person.
Absolutely. Thank you, Jeff. It's a great time. I appreciate you, man.
All right, brother. Talk to you later.
Have a good one.